Welcome to Everyday Economics, the podcast that helps you learn about the economic world happening around you every day. I'm your host, Chris Krug, president of the 501c3 nonprofit, nonpartisan Franklin News Foundation. Everyday Economics, a production of America's Talking Network. You can subscribe to all of our podcasts at americastalking.com. To support Everyday Economics, please make your tax-deductible charitable contribution by clicking the link in the show description. We're recording this episode on Friday, January 5th, 2024, and joining me as always is Dr. Orphe Divounguy, PhD economist. Dr. O, Happy New Year. It's so great to be back with you.
It's great to be back in the studio. Happy New Year.
We walk into some pretty significant economic data, literally just released, this morning. And again, we're recording this on January 5th, which is a Friday. Department of Labor is saying that we added 216,000 jobs in the month of December. That would be about a 40,000 job increase over the month of November. And it's blowing people away. Very few people, that track or forecast thought that we would come in with a number that strong. What do you think's underlying, and what does it mean in this moment?
Well, again, we talked about this on the podcast back in December. We said, look, the Fed came in and showed the world that it expected economic growth to slow and inflation to potentially even fall below 2%, below its target. And that would imply rate cuts, roughly 3 rate cuts in 2024. And the markets overreacted. We saw the markets pricing in 6 rate cuts for 2024 at the end of the last year. Great holiday gift for those waiting to buy a home because mortgage rates tumbled. Great holiday gift for those, looking to take on more debt because basically yields, short-term yields, long-term yields came down. Financial and credit conditions eased. It was really, really, really a lot of fun. But I warned at the end of last year that the easing of financial and credit conditions could essentially kind of give consumers that little boost and potentially cause disinflation, the process of disinflation to slow down. Mm-hmm. And sure enough, we've been seeing this since November, right? In October, we had the surge in yields. And as soon as November came in, yields came down, easing financial and credit conditions. November, we saw economic activity increase in November. And then now in December, we see another uptick in economic activity in December. We're going to go into January, and I can promise you that everyone who was betting that the Fed would be cutting in the first quarter of 2024 is likely going to be losing a lot of money on that bet. Mm-hmm. I think, the market's now reacting again and correcting from this, from their that enthusiasm that we saw at the end of last year. And now that, it's coming back in line with what the Fed had in mind, going from pricing in 6 rate cuts to last time I checked pricing in 4 rate cuts. And after today's jobs report, I think we're down to where we probably need to be, where yields probably need to be, with the market pricing in the 3 rate cuts and maybe even less now because, that process of disinflation is kind of slowing down and potentially even stalling in the first quarter could mean yields would climb again.
So let's talk about yields real quick. And I think that, one of the things that you do exceptionally well is to make complex stuff understandable. The 10-year Treasury is important because it's a benchmark, right? That was up 9 basis points earlier this week. I think it was on Wednesday. And, was at 3.995 or something like that.
Yeah, knocking on the 4% door. By the way, it came down a lot from 5% in October, right? So
right.
surged in October.
Right.
Came down quite a bit.
And the importance of that is, you know, I mean, if you're going to make a bet with your money, if you have money to invest, and if you put it into a 10-year treasury, you get a guaranteed return. So you're not putting it into the market. You're not dealing with the volatility of stocks or mutual funds. You're buying treasuries that are guaranteed to return you a rate of X percent. In this case, 3.995.
I mean, that's right. The 10-year treasury note is basically U.S. debt. You are basically lending money to the U.S. government. That's really what it is. And why is it so important? It's important because banks own that stuff, and it affects their balance. The yield affects their balance sheets, and so we saw in March, for example, that you had a somewhat of a banking crisis because, you know, banks, the value of the notes held by banks had tumbled as yields increased at the start of this year, and so banks were in somewhat a bit of trouble, and so people got worried about that and started taking their money out of the banking system. But basically, look, just to make it really simple, treasury yields are a function of current inflation and economic growth, as well as expectations about future economic conditions. And I always say to people, I say, look, you know, if I were to lend you money today, I would want a return on that investment that pays me above and maybe a little bit beyond the rate of inflation. Otherwise, I'd be losing money.
Right. It's not a good deal. It's not a good deal for me otherwise.
Of course. And so inflation and expected economic conditions is going to kind of determine that what that yield is going to be for lending to the US government. And that 10-year treasury yield also, because banks own that stuff, it's also going to determine the kind of credit card interest rates you're going to get. Mortgage rates tend to follow the 10-year as well. And so, you know, the type of loans that you're going to get over that, you know, those long-term loans over that, you know, 10-year, 20, 30-year horizon, right? So, and so mortgage rates really follow the 10-year. And we saw that, of course, when the 10-year goes down, well, the 30-year fixed rate mortgage goes down. Mm-hmm. You know, those yields really matter for the kind of lending consumers are going to get, right? And so if you're wondering, okay, why should this matter to me? It matters because if you have a credit card or if you're looking to take out another credit card, if you have some debt, right? And let's give you another scarier example, I guess. You have a number of businesses that will need to refinance their debt in 2024. And if you're going to have to refinance your debt in 2024, you're faced with much higher interest rates than you were faced with only about a year and a half ago or 2 years ago. And so that really matters. And if you can't refinance it, if you don't have enough cash on hand and you can't refinance your debt, well, how do you make payroll? And so that has huge implications for not just consumers, but businesses. And ultimately, those businesses hire and create the jobs that we need to keep going in America today. And so, of course, that 10-year treasury yield really, really matters for the economy. And as economic growth prospects improve, right, we're seeing a strong labor market, right? We're seeing the potential for disinflation to kind of stall, right? And as all those prospects improve, that actually pushes up the yield on the 10-year. And so I warned about this at the end of December, in December last year after the last Fed meeting. And now, like, we're seeing it. We're seeing it. We're likely going to see mortgage rates tick back up a little bit. And people are going to be waiting for the next CPI report and the next PCE to figure out what is really going on the inflation front.
Great to spend time with you today. For Orphe Divounguy, this has been Chris Krug. Subscribe to Everyday Economics and dozens of other high-quality podcasts at americastalking.com.
Are you tired of news that puts politics over people? At the nonprofit Franklin News Foundation, we believe in putting people over politics by delivering nonpartisan news and audio content that serves you, the American taxpayer. With Franklin News Foundation, you can read fact-based, state-focused news for free at thecentersquare.com. You can listen to civil, balanced conversations between policy experts through our podcast network at americastalking.com. Or you can get in-depth news on K-12 education spending, curriculum, and school safety at chalkboardnews.com. It's all free through Franklin, where we put you, the American taxpayer, first in every story, episode, and conversation. And it's only possible through our supporters. Together, we can produce content that puts people over politics and brings Americans the news they deserve. Become a supporter today at franklinnews.org/donate. Once again, that's franklinnews.org/donate.